Hi, my name is Khan and welcome to the new chapter. In this chapter, we are going to learn about what is imbalance and fair value gap, IPA. There are different names but work are similar. So what is imbalance? When market push higher and lower in a unhealthy way, or you can say impulsive way, then market create some imbalance and then market again push higher and lower to fill all imbalance, then market push downside. So you can understand that what is imbalance. Let me show you exactly on chart, then you can understand more better. This is a bullish and this is a bearish diagram. And what is imbalance? So first of all, you have to understand if market is a bullish, means a candlestick is a bullish. So you have to mark first one is here, this candle is high, you can say first candle high is here and third candle low, which one is here. If you drag this one, then you can see here this space zone is our imbalance. Okay, and same thing work in a bearish market. In a bearish market, you have to mark here first candle low, which one is here. Correct, this low is here and third candle high, which one is here, right? So this zone is our imbalance zone. Okay, and sometime what happened, market create move something like this shadow is a very larger, then where is our imbalance? Imbalance size doesn't matter, maybe larger and maybe smaller and maybe medium, it doesn't matter, work are similar in every situation. If market create something like this, so this is our minor imbalance available here and work very fine. So what happen if this candle break this imbalance? And what is this? In this case, there is no imbalance. There is no imbalance. Market mitigate the previous candle low and there is no imbalance. And same process will be applicable in a bullish market. If this candle low is here like this, so there is no imbalance left here and this is a mitigated here, everything is mitigated here, there is a no imbalance available here. Imbalance basically used on during marking POI during entry period, which will be covered in upcoming chapters, that how you can use order block, POI and entry zone. So first of all, start from the bottom of the structure. You can see this candle low is here, this candle high is here and third candle low is here. So this one is our imbalance. Okay, in the next move what happened, this candle high is here and third candle low is here and gap between this low and this high, this one is our imbalance. Then what happened, market pushed downside and filled all imbalance, and imbalance can be used only one time, use only. So finally market filled this all imbalance and then market push higher high. And then what happened, where is our next imbalance? This bearish candle is here and this bearish candle high is here. Okay, and third candle low, which one is here? If I drag here, so this one our imbalance. Okay, the next candle, which one is here, and third candle low, which one is here, which is already mitigate here. It means there is no imbalance available here, so we can't mark this as a imbalance. In the next attempt, what happened, this candle high is here and third candle low is here. Okay, if I drag here, you can see this imbalance also mitigate here. But in the next wave, what happened here, market again push higher high and create new imbalance, this candle high and third candle low, which one is here. Again market create this one and this one is also mitigate here. So in this leg, where is our unmitigated, or you can say imbalance FVG? In this leg only two zone are still left, which is unmitigated. It means market can be pushed downside, first zone is here, then market can be pushed higher and the next attempt is here, market can be reversed to the downside to mitigate extreme unmitigated imbalance, which one is here, and then market can be go higher. And same scenario will be applicable in a bearish market. It doesn't matter that bullish or bearish. Now we are going to switch into the real chart, then you can understand more better that how you can identify imbalance and how it look like on real chart and how you can identify. So first of all, switch into the real chart. So this is our bearish structure. As you can see here, market momentum is a bearish, and when market push downside and create new lower low, that's called bearish structure. So same thing happen here, market push downside and break the previous major low, which one is here, and close below it. When market break the previous low and close below it, which is act like a complete break of structure. So in this case, you have to identify where is our imbalance. So first of all, you can see here, you have to start from the top to bottom, or in a bearish market, in a bullish market, you have to mark bottom to top. So in this case, you have to mark this one is our lower high and start marking where is our unmitigated, or you can say imbalance FVC. Okay, so in this leg, where is our imbalance? Right, start from the top of the structure. This candle is our highest candle, this candle low is here, right, and third candle high is here. So this one is our proper imbalance. Right, in the next candle you can see here every candle is mitigate here, you can see, right, every candle is here. There is no imbalance available here, only one imbalance which is unmitigated on the top of the structure. In the next move you can see completely market pushing downside, and at this point what happened here? This candle low is here, right, and this candle low is here, okay, and the next third candle high which is here, right, which is already mitigate here by this move. So we can't use this one is as a imbalance, and some people mark this one is as a imbalance, right, but this one is a not imbalance because the actual last buying candle before this sell, which one is here, this dark candle, which one is here. So you have to mark this candle, right, not this one. These are inside war candlestick, so you have to only focus on this actual candle, which one is here, like this, right. So only two imbalance in this leg which is unmitigated, so you have to wait for taking out this, or you can say fill this imbalance, then you can take entry for the buy or sell, because momentum is a bearish, so you have to wait for sell. So first is already mitigate here. Now you have only one imbalance which is on the extreme point like this, okay. So market must be fill the imbalance before downside and before upside, but it's depend on the structure and criteria. Sometime this can be changed. Sometime market taken out the inducement and fill the recent imbalance and then push downside. Sometime market tap on the extreme imbalance and then market push downside. So it's depend on the situation, but and how we can take entry and how we can identify order block, POI, everything which will be covered in upcoming chapters. So market must be fill this imbalance before the downside. So first of all you can put the stall, and at this point you can simply sell here and put the stop loss just high of it and target, and it's depend if market push more downside and create new low, so you have to wait for it. And let's see what happen next here, okay. If market push downside, then our target will be here, which is a recent low. So let's see what happen next here. Finally market mitigate this imbalance, right. When market fill this imbalance, we can't use in the next attempt. Imbalance can be used only one time, use only. Market push downside and this become our target. Now you can see market hit our target, and after this move you can see where is our next imbalance. In this leg you can see everything is mitigated here, and you don't need to wait for to find the imbalance. Why? Because there is no boss. This is a just liquidity sweep, so you have to buy here. In this series we are just learning that how we can identify valid and invalid imbalance fair value gap, and how we can take entry, which will be covered in upcoming chapters. So no need to worry anything. Now let's switch into the next example, that how we can identify valid imbalance in a bullish market. This is our bullish diagram, and we can also understand, as we have discussed in a previous chapter, structure mapping, that how structure is working here. Now you can understand on same chart that what is imbalance and how imbalance is working. So you can see here in the first structure, break of structure. After break of structure, market must be taken out the inducement before to continue go higher. So in this case you have to identify where is our imbalance. Imbalance must be on PY point and entry point. Market must be taken out the imbalance, and maximum time market taken out the extreme imbalance before market push downside or upside. So in this case same scenario will be happen and most of the time. So what happened here? Break of structure. After break of structure, our higher high confirm here, as we have discussed in a previous chapter. So in this case, what is inducement? Inducement was here. You have to identify where is our imbalance. You have to mark the bottom to top in a bullish market. So you can see here this leg is here, something like this, right? So you have to start mapping where is our inducement. So in this leg you have to identify where is our unmitigated imbalance in this leg, because this one is our single leg. Start from the bottom. In this case this was our last, this one is our lowest candle, which one is here, right? And this is our third candle low, which is already mitigated by this move. In this example, this move mitigated by this one, and the next one is here, and this one is already mitigated by this one, okay? It means everything is mitigated here till this low. Now switch into the next move, right? So what happened here? This low, this candle high is here, and third candle low, which one is here, and this market tick. And then what happened here? Market tap on this unmitigated imbalance, or you can say FVC, IPA. Okay, market fill this extreme IPA, market fill this extreme fair value gap imbalance, and then market push higher. Market most of the time taking out your extreme imbalance. In the next attempt, same thing happen here. Then what happened? Market push higher high, break the structure is here. After break of structure, what happened here? Market taken out the inducement. After taking out the inducement, you have to identify where is our imbalance. Imbalance start from the bottom of the structure always, because market taken out the extreme imbalance before continue go higher or lower. So after break of structure, you can see this one is our first high is here and low is here. So which one is already mitigated by this small pullback. So you have to just little bit push downside and then identify where is our imbalance. So start from the bottom always, right? Because in a bullish market, so in this case you can see everything is mitigate here, everything is mitigate here, right? And this is very larger move already mitigate here, right? This is a not imbalance, this is a just PY, which will be covered in upcoming chapter. Okay, so everything is mitigate here till now. You have to mark where is our imbalance. So if you are marking imbalance like this, so this is a not a valid way. Why this is a not a valid imbalance marking zone? This one, even market tap here but market push higher. But why this is a not a valid? First of all, you have to identify where is our highest and lowest candle. So in this case, this one is our lowest candle, which one is here, and the third candle low, which one is here, and now this one is our perfect. Let me show you exactly. This is a very important, because this candle high and low both are protected, not taken out by any move. If any candle taken out this low, something like this, right? So this can be our a valid imbalance like this. Okay, so this is a important, you have to remember this thing. So actual candle low is here, I mean lowest candle is here, and lowest candle high and third candle low, which one is here. So this become our valid imbalance is here. And the next imbalance, where is our next imbalance? This candle high and third candle low is here. So this one is also imbalance, right? So in this line only 3 imbalance was here, which is first one is already mitigated by this move, but there are 2 imbalance is still left to unmitigated, right? Then what happened? Market push downside and market taken out the extreme imbalance, and then market push downside. Most of the time market fill your extreme imbalance, and this scenario will be applicable in a bullish market and bearish market everywhere. Same thing happen here. After change of character, what happened here? This was our confirmed change of character was here. And after this change of character, you have to identify where is our unmitigated imbalance. In a bearish market, you have to start from the top to bottom. So first of all, look at this one. This one our highest point, and this one is our lowest point in this leg, and this one is our single leg move. So you can see this candle low is here and high is here. So this imbalance is already mitigated by this move. Again, everything is mitigated here, right? There is no imbalance still left. And same scenario happen here. This candle low and next move, which one is here. So this become our valid imbalance proper marking way. And if you are marking here like this, right? So this imbalance only valid till this a pullback. So this imbalance only eligible for this one, right? Market push upside and fill this imbalance, and then market push downside. This is a counter trend, but when market break the actual structure and if there is no imbalance available there, so in that case you can use this micro imbalance is here, which is a rest, and market after fill this imbalance and market create something any bearish structure, you can sell or buy. Okay, so which will be covered in entry types and entry explanation, POI identification. You have to identify unmitigated imbalance only, right? And below it you can see there are lot of unmitigated imbalance, right? So where is our next imbalance? This one. Above it you can see there is no imbalance still left, and this one is also imbalance, and this one is also imbalance, right? But these imbalance are not valid. These 2 imbalance are invalid. Why? Let me show you exactly reason. Because the previous candle high taken out by this move, it means this is our highest candle before this drop. So this candle low, which one is here, right? And this move is already mitigated by this move. So there is no imbalance is here. This is an inside bar before this move. And let's see on the next move what happened here. This candle low, which is already mitigated by this move, and same thing applicable here. this is a not a valid imbalance. Why? Because the highest candle is here and low is here. So you have to mark imbalance something like this, which is a correct way. This candle low is here and high is here. So this is our valid imbalance. This is a not whole imbalance. This is a valid imbalance, something like this. And same process will be applicable here into downside. This is an imbalance. And same thing will be applicable here. This is our lowest low and this is our previous candle high. So this is our minor imbalance which is here. Now this entire imbalance. Okay, so this is a not a proper imbalance. Actual imbalance only here. This is our lowest candle and this is our next high which is here. So this one is our correct and valid way to identify proper imbalance. First imbalance is here and second imbalance is here. This is a not inside, this is a not full imbalance, right? So this is a correct way to identify proper imbalance, and this one our extreme imbalance. And market taken out all imbalance most of the time and market push downside. And after collect all imbalance, then you have to wait for lower time frame confirmation before buy or sell. And same thing will be applicable here. You can see here in this leg, after collect all extreme imbalance, in this case you can see here market taken out this extreme imbalance is here and then fill this imbalance and push downside, and just above it there is a no unmitigated imbalance is here. You can see here clearly, right? So everything is a mitigate here, only one imbalance is left here. Market fill this imbalance and push downside, and just below it you can see another one, which one is here. So market most of the time taking out your extreme imbalance and then market push downside or upside. After break of structure you can see there are lot of imbalance is available is here. You can see here after break of structure market taking out the extreme imbalance and then push downside. So where is imbalance in this case? You can see before taking out this IDM, you can see everything is a mitigate here. Okay, only one imbalance is left here, this candle low and this candle high, and this is only proper imbalance. And do not mark this is our as a imbalance. Why? Because this candle is a not last buying candle before this top. This is our highest candle before this top, and color and candle color doesn't matter. Sometimes this can be a bullish and this can be bearish, right? So this one is our highest candle before this top. So this highest candle low is here and the next candle high is here. So this is our imbalance. And next imbalance, where is our next imbalance? This candle low and this candle high, right? Which is already mitigated by this move. Okay, so only one imbalance is left here. In future this can be tap here and market can be pushed downside or upside. So this is a correct way to identifying the proper imbalance. I hope you understand what is imbalance and how we can identify in a valid way. Keep backtest on your chart and identify imbalance on your real chart and previous chart, and try, if you are not understand how it's valid and not, you can rewatch this video multiple times, and I will see you on the next chapter. Happy trading.